All right. Hello. Welcome everyone to another Power 20. Today we're going to be opening the doors to our deal desk. We want to show you how to evaluate a multifamily acquisition before making an offer. So we're going to use one of our current projects, that is Don Quixote, as a case study, not to sell it or anything, but to demonstrate the disciplined process behind our investment decisions. Whether you're an investor, inspiring apartment owner, or simply a curious about commercial real estate, our goal is to leave you with a framework you can use to evaluate opportunities more confidently. So, as always, today's discussion is for educational purposes only and should not be considered investment, legal, or tax advice. Okay? All right. Christina, before you even looked at the financials, why did Albuquerque become a market worth pursuing?
It's interesting. A lot of people ask that because it's not a market you hear a lot about. I would say one of the first criteria is boots on the ground. So when you're getting started, any market that you're going to be in, you want to make sure you've got people on the ground to help you double check different properties, make sure they know the players, make sure they know the market. The other thing is the market fundamentals. You really want to make sure you're going to a great location. Now, people think, well, Christina, Albuquerque is not great. It's not true. Albuquerque is a hidden gem. My family's been in New Mexico since I think three generations now in different parts of New Mexico, with the last generation being around the Albuquerque, Los Lunas area. There's so many new companies coming in, Walmart, Facebook. There's population trends are growing. And one of the big things, especially in the arena that we're helping to assist with, which is affordable housing, there is a housing shortage for affordable housing. So the government's really trying to get more homes built to the tune of 25,000 home shortage at the moment within the Albuquerque and greater Bernalillo County area. Of course, we want employment diversity. So between the hospitals, the working force, the labs, and the universities and schools. And we want a landlord-friendly environment. And that's what Albuquerque is. And also one of the other things that we looked at is, the government-backed housing demand. There is a lot of opportunities for grants and other types of government support. So just remember, a great property in a weak market is still a poor investment. So we really have to look at the market first.
Hey, thank you for that. Yeah, I'm starting to hear more people talk about New Mexico a little bit more, which is I'm happy about. Okay, so once you identified the market, what made Don Quixote stand out among the dozens of opportunities you reviewed?
Well, one of the first things is location, location, location. We couldn't be in a better area in terms of our adjacencies to universities, to hospitals, and the military base. And then the other thing, of course, is the existing cash flow. It is a cash cow at the moment because it is seller finance. So even when we take a look at the finances by adding property management, the numbers were still great. 32 units helps us to scale. There's strong occupancy with 31 of 32 of the units currently tenanted. There's operational upside because we've got a gap to the existing market rent and we've got opportunities for um, other income streams that we can add. Seller financing for us was a huge plus to be able to get a favorable rate at 4.25%. And really our ability to improve the net operating income over time. I mean, right now the net operating income is over 200,000 annualized, which is fantastic, but we see a path to get that closer to 300,000 in the next 5 years. And having a solid exit strategy. In our case, the exit strategy is to refinance and hold because it's such a great property. It's one of those that we want to keep in our portfolio for years to come.
Awesome. And okay, let's talk about capital. Leia, we can't see you now, but it's fine. Once Christina identifies a property she believes is worth pursuing, what characteristics make it attractive from an investor's perspective?
Right. Thanks, Kristen. And that's really a great question, right? Because finding a property is only the first step. The bigger question is whether it's a good investment for our investors. So the first thing we look at really is predictable cash flow, right? So the property is already generating income right now. Cash flowing assets can provide greater stability than starting with a vacant property. Two, conservative underwriting. We underwrite based on realistic assumptions not best case scenarios. We also stress test the numbers, and that's Christina's job. She's our numbers gal. So we stress test the numbers to see how the deal performs under different conditions. The third one would be multiple exit strategies. We just don't rely on a single outcome.
Right.
Our primary strategy is to refinance while continuing to own the property, but we evaluate multiple options from the beginning. We also risk adjusted returns. Every investment has a risk. Our goal is to ensure the potential returns are appropriate for the level of risk being taken. And capital preservation. Protecting investor capital is always the first priority for us. Growth is important, but preserving capital comes first, right? And finally, alignment between sponsor and investor. This is really important. We invest significant time, and I can't even tell you how much time we spent just during the due diligence, the resources, and our own reputation into every opportunity, everything that we do. And our success is directly tied to our investor success. And at the end of the day, the investors aren't simply investing in an apartment building. They're really investing in the teams, the process, discipline, and the ability to make thoughtful decisions over the life of the investment.
Thank you, Leah. I could tell you about some due diligence,
Yeah, I know.
it's a really long process.
Hours and hours and pages, right?
Right. All right. Julie, after acquisition, your focus shifts to operations. What opportunities did you immediately identify to improve the property's performance?
Also, a great question, Kristen, looking at an operations standpoint. So, the interesting thing about this property, it's been in the family for over three generations, right? So it's currently the seller is the one that's managing the property. So one of the first things that we had to look at was property management companies and, looking for a property management that's not only efficient and is also going to fit in with our property, but also aligns with our values and our mission. So our mission is, student housing, veterans and workforce. So that property management, as we interviewed, they had to align with those missions and to understand the market. As Christina said, location, location, location. Do they have experience with student housing? Are they familiar with the two universities that are close by? How are they going to get student housing in? Are they familiar with veteran housing? Do they have any kind of relationships with Kirtland Air Force Base, also with the hospitals? So understanding that was one of the key things, from an operations perspective. Second thing we looked at was resident retention, right? So currently, um, and Don Quixote, we have about 70% student housing. So how do we retain those students? We understand like during the summer, there's that break. How do we work with aligning the leases, getting them to stay, and working on rent alignment with the market? So currently where we sit is we can see a 15% upside in the rents because we're not even close to fair market value on rents. So working on that while we want to increase the rents, we don't want to lose the current tenants that are there because the property is currently 97% occupied, right? So aligning that, increasing the rents, watching our bottom line was definitely something that was important to us. Expense management, so just looking at the different property management companies, and aligning with the fees, the typical fees that you're going to have, the management fees, the leasing fees, the marketing fees. So working with the different property management companies along those lines. And also vendor optimization. So looking at, what kind of expenses we'll have with lawn care, pest control, different things like that, and maintaining occupancy during improvements. So that was one of the key things after we got the inspection. How are we going to maintain occupancy? Are we, fortunately for us, this property is, cash flowing as is. There is not much renovations that need done. So as the tenants exit, we'll look at that rent ready and renovation strategy. So it's a lot of things that you have to look at from an operations standpoint and how you're going to improve the property's performance. Um, Christina mentioned, we want to buy, not just based on the market, but also the location and everything that's going around in the economy around there. There's so much excuse me, going on in New Mexico, Albuquerque, especially with the Air Force Base being there, the universities, the hospital, and also Sandia Labs. The economy is great. Amazon's coming in. Well, they're already there, and the economies of scale is there. So that's going to back that property that's there. So it's always going to be, occupied. So buying well is only the beginning, but the real value is created through disciplined execution after closing. So we're looking, we did our due diligence. We're going to continue to do due diligence. And from an asset management standpoint, working with the property manager to ensure that our best interest is their best interest as well as our investors' interest.
Right. Keeping that alignment with like the goals and everything.
Absolutely.
That's a lot. You're doing a lot. All right. So every deal has a risk. What were the biggest risk? Anyone can answer this. What were the biggest risk you identified, and why were you comfortable moving forward anyway?
Leah, do you want to take this or would you like me to take it?
You can take it if you want. Or we
Go for it. Go for it.
okay. So probably one of the risks I'd have to say is the age of the property.
Okay.
It is an older property, and older properties require maintenance, right? Um, and with that, you've got the deferred maintenance on an older property. So we identified items needing attention and included them as part of our business plan moving forward. Also, market assumptions is a big one. So we use conservative rent growth and expense assumptions. Occupancy sensitivity, but I don't think we're going to have a problem with that, as Julie mentioned. And I think we continue to mention this all the time. We're near the universities. You've got the hospitals, you've got Amazon and all these other companies coming in, and of course the Air Force Base, right?
Right.
Um, the interest rate environment. We consider today's financing environment and long-term strategy. That's a big one. And stress testing. So we model different, well, not we, I have to say, Christina, I give her lots of kudos for this in different scenarios before moving forward. She definitely does her due diligence. And basically, why we move forward is even after accounting for these risks, the numbers really supported the investments. Um, so really, our goal isn't to eliminate the risk, it's to identify it, to understand it, and make informed decisions based on realistic assumptions. It's a really good deal.
Awesome. I totally agree. Just being involved with all the paperwork and the due diligence.
Yeah, Kristen,
Uh,
you've been in the forefront.
I have, and I will also contend that like I learned a lot of what numbers actually mean by following you guys. So I feel like I
I
got a little
think we're all
smarter.
learning.
Absolutely. Every day.
Kristen probably had nightmares about numbers after those due diligence evenings.
Yeah, I had to go find my scientific calculator for a minute. Like, hey, if someone is watching, I think we have a couple of people that join. Remembers only one lesson from today. This discussion, what would you want it to be?
Take that one if you don't mind, team. I would say the one thing I want people to walk away with is about discipline, right? And making disciplined decisions repeatedly, especially if you're newer in real estate. We've all been there. I've been here now in 3.5 years. And in the beginning, I had shiny object syndrome and I wanted to do everything. And, successful investing isn't just about chasing the biggest returns. It's about making sure that you're making disciplined decisions every single day and that every property should earn the right to be purchased through careful analysis, not about emotion, not about hype, or not about FOMO. It's really, I always tell people my favorite saying when it comes to me geeking out on numbers, it's because people lie and numbers don't. And so make sure you do your homework.
Love
So
that thing.
true.
Thank you.
That will forever be ingrained in my head.
Yep.
People lie, numbers don't.
Mhm.
All right. I think that's all that we have as far as questions. And I don't see anything in the chat in regards to asking anything. Okay. All right. Well then, thank you everyone for joining for another Power 20. We hope today gave you a clearer understanding of how we evaluate multifamily opportunities and the level of discipline behind every acquisition decision. If you'd like to review the Don Quixote executive summary and complete our soft interest form, simply comment Don Q or send us a direct message. We'll be happy to share it with you. No obligation, just an opportunity to learn more. You can also join us on Saturday, 6 p.m. Eastern, to do a deep dive into the real case study. So we appreciate your time and look forward to seeing you on the next Power 20.
Hey, join us
Join,
tonight.
join us tonight.
Right.